I still think China is cheap even after this 40% rally. Let me explain, because there is a strategy around that thought. The China Technological Stocks Internet ETF is up 35% in a month. We can say it was a crazy September on the Prime Minister delivering a speech with an economic boost, with a plan to unleash stimulus, what they called whatever it takes draggy moment for China, fiscal spending, covering the property market decline, lowering interest rates. And that is then a plan that many were very positive about, especially when stocks were going out, on the revival of China, because the situation there is such that real estate prices are declining and have been declining for a while now, a year, and that of course doesn't help the economy. When it comes to the rally, the stock market rally, and then we'll discuss the economy, the plan, the stimulus, and the valuations to see what is the risk and reward. When it comes to the rally, such rallies in China are not uncommon. We have seen one similar in May. 2021 was also a rally, a boom and a bust, and there were 2015, 2007. And when it comes to stocks going up, not just the Chinese that are gamblers, but also the rest of the world. This is QEB, the ETF that we just mentioned, and the assets there in less than a month went from 4 billion to 8 billion. So that's a 2x in assets on the ETF, going up just 35%. So there were huge inflows chasing the rally, and therefore, thanks to those inflows and thanks to those buy, you have 40% up things. Here you can see it better. So just an explosion in money that doesn't want to miss out on the gains. But if you look at it from a fundamental perspective, the stocks now are where those were a year ago, a few years ago. So not much has really changed from that perspective. Yes, there was this a little bit oversold situation there, but also the QEB index ETF is still relatively where it was and still extremely far from where it was 3 years ago. To get back to these levels, we are looking at a 3x. I don't know whether the rally will continue. It will depend on emotions and sentiment, because if stocks keep going up, more money will flow into those stocks, and the rally might continue, especially if there is some more positive news from the government, from the Chinese economy, etc., and improvement in fundamentals. So we have seen 3 years of bad news for China, and now finally we are seeing some better news. But let's focus on fundamentals and the risk and reward of value investing. What does that mean? Well, if things go good, great. But if things don't go as expected, will we still make a return? And that is how we focus on fundamentals. We want to not lose money if things miss the target, but we want to make good money if things go as planned. You can never know. I'm not here to predict. I'm here to play the risk and reward game. And if I look at valuations at the end of September, this is from JPM, China still has the lowest, the cheapest stock market ratio out there. In exuberant times, it can get much higher, even close to 25, so there is still a lot of room for growth, while other markets have a lot of room for declining. And if you look at what happened from a fundamental perspective, the rally, the P ratio went from 8 to 11-ish, something like that, so still not that much of a jump when it comes to investing. Yes, of course, when stocks go up, mathematically the risk increases and your return declines. That's simple mathematics. But let's discuss from where can more good news come, and that is the Chinese economy. First, We have, yes, deflation, consumers are wary of economic situations, etc., spending a little bit less, so there are price contracts and there have been price contractions across the board. Again, housing investments decline, the first decline in housing in decades, and this looks terrible. But this is a 10% decline here, but this is still 90% investment activity. Given the growth here, we are still at 2017 levels when it comes to investment activity in housing. So it's not like nothing is going on, and you'll see later a chart that perfectly explains that. Of course, some people are forecasting that China will miss the growth target of 5%. Okay, it will be 4.8, or like Goldman is now predicting from 4.7 it will be 4.9. That's not a disaster, that's still good. Okay, it's not the target of 5%, but there is still economic growth despite the decline in prices, the deflation. But this is the chart that I think explains everything. 50% of copper demand comes from China, and the price is high. So these are the real numbers, this is reality what's going on. The price of copper is still high, which means there is still economic activity there, still economic growth of 4-5%, still increased demand for copper, and those are the numbers that tell you the real thing apart from the headlines. Now, when it comes to investing, you have to invest, which means thinking about strategy and also exposure. Of course, I have three ways to approach, let's say, the current rally, and those are pretty simple. You can sell, you are up 50%, take the money and run, and that's a good strategy. You then go on to the next cheapest thing and you will do okay. Now, we can keep on possible positive news in the next 12 to 24 months as the stimulus goes in, and that's also a good strategy. And then there is also the long-term scalability of the businesses, of the specific business you own, the cheapness. And if you look at China and Asia globally, there is still a lot of room for growth, for businesses to grow, to scale. So I think all of the three strategies have its pros and cons. If you sell now, stocks go up, it's a negative. If you hold, stocks go back down as the rally deflates, again, it's a negative. We are not here to predict stock prices, but if we look at the fundamentals, China still looks okay. My personal strategy is somewhere in between. Here, we'll see how it goes here, and then how that reflects the fundamentals for long-term scaling and growth. I didn't sell anything from the position during the rally. I actually bought some more today as I'm filming this on Monday. You likely see this video on Wednesday, and that's my thoughts. Nothing there. I wanted to wait with discussing just the rally to see the development, the fundamentals. Stocks can go anywhere. It's about what you own, what business you own, why you own it, and what's the strategy in relation to your portfolio. To see what I do, check my research platform. Thanks for watching. I'll see you in the next video.